What if the biggest threat to your investment portfolio isn't inflation, market volatility, or interest rates, but your own emotional reaction to the daily news cycle? Today's guest spent over 2 decades in the trenches of Wall Street as an investment analyst, a hedge fund insider, and an engineer. He watched institutional pros use rigorous frameworks while retail investors were left to gamble on all the hype. He's built a platform designed to give regular people institutional guardrails. We're going to unpack all this chaos and see how he has become a radically consistent investor. I hope I did that correctly. Welcome back to another episode of The Wealth Block. I'm Stephen Weinstock. For more than 25 years, I've been investing in real estate, raising capital, operating apartment buildings, making loans, and building businesses. On this show, I sit down with operators, founders, investors, and entrepreneurs who are actually doing the work. No theory, no fluff, just real conversations about business, investing, entrepreneurship, and building wealth. This is The Wealth Clock. Our guest today is Eric Chu, a CFA charter holder and the CEO and co-founder of Tradesk. One word, Tradesk. With 20 years of experience cutting through the complexities of the capital markets and engineering, Eric is on a mission to modernize retail brokerage. He's taking the high-level tools once reserved for the big boys, for the hedge funds, like insider trader tracking, thematic allocations, and advanced AI decision filters, and putting them into a calm, systemized interface built for everyone, from high net worth professionals to the next generation of investors. Before we jump in, I have a sponsor, Cable NOI. Cable NOI. NOI stands for net operating income. Cable NOI is looking for apartment building owners who own any property, any multifamily property with 20 units plus, and they will tell you how much money you could earn from the cable companies. Spectrum, Charter, Cox. You will get residual income. You'll also get an upfront bonus per door. It doesn't cost the building owners anything. There is no wiring. There is no bill back. There is no anything. Nothing to do with the tenants. Tenants will call up their regular cable companies, order internet, order phone service, order TV, and the landlord will get a cut of the action paid directly from the cable companies. CableNOI.com, CableNOI.com. Eric, thank you very much for coming on.
Hey, Steven, thanks for inviting me over on the show. Glad to be here.
Okay. Now, before we start, where are you based out of?
So we are based out of Short Hills, New Jersey. Not too far away from New York City, about half an hour, 40 minutes train ride, depending on what day you hit the traffic.
Sure. Short Hills, I know it well. I'm here in Brooklyn, New York, so I know the New Jersey market very well. Short Hills is a nice area, famous for a big mall. And I think you have some basketball players who, maybe former basketball players who live there. So it's definitely a nice area, a nice part of New Jersey.
Well, thank you. Thank you.
Tell me what Tradesk is. What are you doing? What are you working on? Let's unpack it.
Sure. So Tradesk, we focus on two parts of the business. The one part is on the retail investors. So for retail investors, we have built essentially leveraging decades of experience working on Wall Street. We have handpicked very selectively a few tools that used to be available only to institutional investors. Tools such as insider trading tracking, portfolio allocation, thematic trading, as well as AI insights research. And that's on the retail side. And then the goal there is to help retail investors, maybe you're an active trader or just, busy working professional, want to have a financial plan for your future, for your kids' education, what have you, right? So that you have a dedicated tool that's specifically designed for that purposes. And separately, we also have a institutional practice. We help, especially my background has been in the data center industry for about 15 years. We help with data center operators as well as institutional capital investors sort of navigate through the data center space, which a lot of the people have known for a while that, that's one of the area that's supporting a lot of the AI expansion, be it AI training or inference or AI application in the next wave. A lot of these, technology advancement has been supported by the data centers. And that's the space that we are also focusing on as well.
Got it. So your background is in engineering, but you also worked on Wall Street. When you worked on Wall Street, what industry? Most of our audience is in the real estate industry. That's my background. But, as most investors, We dabble in all that.
Yeah. So when I was
We
when I was an analyst, I used to be a telecommunications coverage analyst, covering companies such as data centers, which I mentioned earlier, as well as wireless carriers, AT&T, Verizon, and also wireless towers, American Tower, SBA Communications. And interestingly, I would point out is, data centers has been for about the last 20 years, a crossover industry between real estate and technology. 20 years ago, when even before I started coverage, when now the largest data center companies sort of first became publicly listed companies, data centers were pretty much a technology play, right? These were companies that are very good at networking equipment, computing equipment, data storage equipment, and essentially providing hosting services. But over the last 20 years, more and more of these traditional technology-focused data center providers, they have taken over the real estate behind the data centers. They have taken over built assets from the ground up, essentially acquiring not only real estate assets, but also power, generation, backup, network equipment, along with the shell and the data centers and the GPUs these days in AI data centers, everything around it. So more and more is becoming a commercial real estate asset class by itself. So it used to be a lot only kind of the technology-focused investors are interested in the space. But over the last 20 years, because these data center operators, companies, they generate a regular cash flow, either in the form of dividends or in the form of share buybacks as appreciation for their equity, for their shares. So becoming more and more attractive to, sort of commercial real estate investors who by investing into data center space, they can not only generate sort of the regular income that they are looking for, but also the capital appreciation as these companies grow with the demand and also with the waves of technology advancement in the marketplace. So that's kind of a good combination and convergence of these two trends to kind of formally separate verticals. And these companies, interestingly, the data center companies, most of them, they have since over the last call it 10, 15 years, converted to a REITs, a real estate investment trusts, obviously with a lot of different, sort of a tax code treatment and then some certain obligations they have to follow. But that's just to give people a sense, where that kind of data center is coming into play.
Understood. So let's back this up a little. Somebody's listening to this podcast. They hear the Tradesk name. They Google it. They either download it, go to the website. Who is this targeted for? Is this targeted for what type of investor is this targeted for?
So we primarily target what we would like to say as the busy working professionals. Most of them are not necessarily in the financial services industry, but also in other professional industries. For example, lawyers, doctors, pharmaceutical companies, marketing executives, so on and so forth, right? So these people, most of them, they're highly paid, right? They have the discretionary income to support investments in whatever, area they're liking. But, I think our platform, Tradesk, really, as I mentioned earlier, we have selected a few key investment tools that can help these investors not only manage their sort of portfolio, understanding their portfolio's risks and do research on individual names, stocks in a highly effective and efficient manner, and essentially helping these guys kind of stay connected with the market and also help them build their financial future.
So this software, this service that you're offering, this is not, and tell me if I'm wrong, this is not necessarily pitching them certain deals or certain investment opportunities. It's more a matter of managing or looking at what's out there and then helping you manage that.
That's absolutely correct. There's no pitching. There's no sort of a selling of certain securities or ideas. For the most part, our platform has been designed as what we call self-directed platform. We provide customers with these tools on a highly selective basis. These tools that customers can utilize in order to, for example, set up recurring investments, pick certain thematic trading themes that they would buy in, and also to utilize, we have also designed the AI engine, what we call Prism AI, that's fully integrated with our platform. Investors, customers, they can not only research specific stocks or ideas, they can also do portfolio level analysis. For example, what's my portfolio concentration? What's driving my portfolio's performance over the last 6 months, 1 year, right? Because the Prism engine is fully integrated to each and every individual's customer. You feel like you are working with an agent that's helping you analyze your portfolio along the way.
This service is a fee or subscription based?
So for now, we are not charging a fee or subscription. It's commission free for US-based investors. And so we are still in the fairly early stages, and we're just working with a selective group of customers, investors, sort of trying to build up the presence of the platform.
Is this invitation only or application available, or could anybody just apply and now they have to get approved?
Yes, anyone can apply. It's available in Apple Store, in Android. There are essentially 3 platforms. Our investment tool is available either Apple on the iOS or Android or on the web. You can also directly, you don't have to download anything, or just go direct to tradesk.co, and then you can put in an application and then start investing right away.
So as of now, since you're not charging a fee, but this is, I guess, you're building up to get enough numbers where it's now feasible to start charging a fee. You're letting the early people in for free. You're vetting them. You're making sure it's somebody that fits the kind of customer that you want. But eventually, this will be a subscription based.
I think that is the idea. Ultimately, we would like to provide enough tools that can add our customers enough value to justify a subscription, hopefully multiple of the value that we can help our customers with versus the subscription fee. But ultimately, I think that's the model.
And based on what you're saying, and I know I asked you this earlier, but your target customer is not going to be a 28-year-old who's making $140,000 a year. It seems that your target customer is somebody who's making more money, more than the average, and they have a background with investing in some sort, more than just, a 401k match. These are people who are, I don't know if I want to use the word skilled, but these are investors who are investing. They're splashing some money around in potentially different investments, not just buying a hedge fund, a mutual fund. And these are people who want to, be involved in more opportunities and have better ways of analyzing their current portfolio and potential new portfolios or new investments.
That's right. I think that's a fair assessment. We are not, there are some sort of tools out there in the marketplace that are more suitable for beginners, right? Someone who have never invested before, who just want to sort of, put in $500 as a start to start sort of dabbling into the investment world. I don't think that's where we are. That's not where we are targeting. We are definitely targeting someone who is a little bit more experienced. I would say, with the analogy of school system, right? We're targeting someone not, an elementary school student, but not a college student. We're targeting someone who may be a middle schooler, a high schooler, who have had a few years of investing experience, who are looking for a good tool, not something that would feed them a lot of noise, but a good tool that can help them sort of cut through some of the noises, navigate through the market, and also help them with managing their portfolio or research individual stocks or look into certain thematic trading themes and recurring investments, right? Just to name a few. So I think that's kind of where we would like to play and where we're targeting.
Do you need any licensing or any kind of certifications to have a software like this? Or is this more, I'm an engineer, I'm going to build out, an excellent product, and I'm not going after the masses. I'm not looking for, every guy who's making $100,000 a year. I'm looking for those, I don't want to say rare, but, a smaller group of high net worth individuals who are going to be dedicated and using your software.
That's a very, very good question. Something I probably should have mentioned earlier. we are operating in a highly regulated industry, financial services industry. We are a SEC registered broker-dealer and also member of FINRA. So we have to follow strict regulations, rules, and securities laws for everything that we do, all the way from, offering from servicing customers to opening accounts, maintaining customers' records, providing confirmation statements, funding, margin loans. Just to give you a few examples, we work with a few, household names as our sort of vendor, provider, partner, companies like AWS, companies like Alpaca, just to name a few, and obviously with the exchanges directly or indirectly for data services. But that's kind of where the backdrop we are working against. We also have, full-time compliance personnel on staff that's, looking into and supervising all the activities that we do on a daily basis, again, just to follow, FINRA and SEC rules and regulations.
So from what I hear, this is not just, some business that was started with a guy who knows how to use Claude and prompts and a whole bunch of backend, just to get compliant with some of these agencies. We're talking, legal bills, lawyer stuff, hundreds of thousands of dollars or, somewhere along those lines, maybe even more. I'm just thinking on the real estate end, when I do loans with HUD, all of a sudden there's an extra 30, 40 grand of legal just to be compliant, for the property. Here you're dealing with tremendously highly regulated businesses. You must have spent a lot of money to start this. So this is not just a fun project that you're doing. Yes, it might be fun, but it's not just something that you launched over a weekend with AI. You really put thought into this. You have obviously people involved, whether it's employees or legal or third-party contracts on this. You had to, I guess, raise money to put this together or bring in partners to put this together. Or maybe you're just independently wealthy and you paid for it out of your own pocket.
Good. Again, very good question. So we actually, Tradesk Securities, we are part of a global corporation. Tradesk is the U.S. sort of operations. In addition, we also have offices in Asia, specifically in Hong Kong. And we're also a registered broker-dealer in Hong Kong with local securities and futures commission, the local, financial regulator. We're also servicing through our Asian regulated entity. We're also servicing Asian-based and other non-US based customers from other countries. So you're right. There is, again, this is a highly regulated area. We have to follow a lot of, compliance, regulatory rules. And then there's a lot of infrastructure that we have invested in, that we have put in place over the last 3+ years. And that's part of our sort of, value proposition as we work with potential customers. For example, one vertical is we work not only, individual or retail customers, we also work with other, small businesses or enterprises, other fintech firms. Just so that because we have spent the time and the money and the efforts to build the entire sort of a compliant infrastructure, other companies, they do not have to. This could be a high-frequency signal provider who are looking to vertically integrating services to their customers by not only providing signals, but also providing trading, execution services. That's kind of where we would come in, right? Again, they don't have to worry about, getting a license, doing all the compliance work, which we have done that already. So we also work with customers in those verticals, what we call B2B, right? Or maybe B2B2C type of customers.
Are the big retail brokerage guys, Schwab, Fidelity, are they your competitors at some point? I understand you're not fighting for the guy who's making 60 grand a year and he's dollar cost averaging, the extra $20 a week that he has left over from his job. And, there's something to say about those people in a good way. But are you competing for some of the same high net worth customers in terms of research and, knowledge?
Again, very good question. So, we would like to say that we compete with them in certain ways, but I think we were trying not to compete against them head to head, right? I think they focus on providing a wide range, right? Millions of customers, a wide range of services, products. And then, and in contrast, I think we serve a small segment of the customers with almost handpicked services that addresses certain pain points of certain customers, especially with working professionals. I think that's kind of where the difference or the differentiator for us are. So we're not trying to be, the jack of all trades. We're really just trying to put together a small tool set that serve a certain, a segment of the customers, especially in the.
Since some of these brokerages are, like you said, the jack of all trades, they do have different segments that target different types of investors. So yes, they'll have, Schwab.com, anyone could join. But hey, if they see you're worth, $26 million and it's sitting in your money market account, they'll have somebody from, a different department reach out to you and try to, focus on you and, get you to do more than what's available to the masses. We have a lot of these big brokerages that own, private wealth, high net worth wealth. They have different arms. They're making acquisitions, to bring these people in. Is this the type of service that if you scale up and you're past, the phase of offering it for free, and you're a couple of years down the road, you have, quite a few paying subscribers that are high net worth. Is this is this a buyout opportunity? Is this something that one of the big firms, the well-known named Wall Street firms would buy, to bring you along, bring along all your investors, whatever money you're making? Hey, that's great, but we feel, with our brand, we could skin this cat and, really make some more money and scale it out. Is that something that is out there?
Not necessarily, but obviously we would like to keep all our options open. I think, one of the areas that we think we're special is, especially compared to the more traditional broker dealers, right? We are more of a fintech firm than the traditional broker dealer. And if you look at across the financial markets, right? It's becoming more and more fintech driven, be it 24/7 trading or tokenization or RWA, right? These are not the traditional sort of brick and mortar, right? Broker dealer services that very much sort of high touch relationship based. And those are not where we focus on. Internally, we have more engineers on staff than the traditional registered brokers or registered representatives. And these are highly skilled engineers that help us not only put together the platform as we see today, but also we are constantly in the process of putting in new features along with sort of development in the market. For example, the 24/7 trading, the tokenized securities. These are all, and then crypto, in tandem with other partners and entities. So these are sort of the more newer, innovative services areas and more fintech driven, very sort of API driven type of services. And these are kind of the areas that we think we were specialized in. We don't compete with, Charles Schwab or Fidelity of the big guys in there. Their business model is very, very different from what we're after.
What are you doing to grow your user base besides podcasts and besides traditional marketing? How are you going after these high net worth individuals?
I think a lot of these are through offline event. We find that to be one of the more successful channels in terms of customers conversion, just because, these customers that we're going after tend to be more reliant on trust, more relying on, what we can offer in terms of kind of track record. And, these, I think the offline kind of channels, it's one area that we have spent a lot of time and effort in. And also in connection with our more institutional business, related to sort of digital infrastructure and data center space.
What do you think the best asset classes over the next couple of years?
That's a great question. It's very, very hard question, to be honest with you. But, again, I mentioned data centers for a few times already. And I think that's one area that I know, but also that's also one asset class that kind of combines or merges both the technology side as well as the hard asset or real estate side. That's kind of a, leveraging both, benefits from the both verticals, both industries. But I think most importantly, if you for some of the audience who are not too familiar with data centers, I've covered the space for 15 years, all the way from the internet, wave back, we're talking 20 years ago, to cloud computing, to now these days AI, right? Every technology wave, at least in the last 20 years, it's all related around data, right? Around data storage, transmission, processing, and exchange, right? All these four key functions cannot happen without data center. So in going forward, either, especially with the AI, everywhere you look, right, you need data centers to be able to support the growth, the expansion, and all the functionalities, the speed, right, the shortened latency, everything that you're looking for, the requirements that these companies or customers are requesting. So, I still think data center, it's a very interesting asset class. And continue to sort of benefit from the technological growth over the next, foreseeable.
Yeah, no, I agree. Data centers have been a word for quite some time. Maybe it started with all the cloud computing, and yeah, Facebook needs data centers, and Google needs data centers. And if I'm not mistaken, there are a couple of REITs that specialize in data centers. Maybe Digital River, I think, is one of them.
Digital
Maybe
Realty is one of them.
Sound
Equinix is
Digital
another.
Realty. Yeah, so it's obviously an asset class. I'm in the real estate business, and I always hear about different opportunities, whether it's in development, they get involved with data centers. I think the masses have been hearing more about it really in the last year or so because of AI, and AI obviously puts a tremendous strain on, or uses a tremendous amount of data. So you have data centers popping up left and right. Become a little controversial, not in my backyard, build it, but not in my backyard. Same with the cell phone towers. I need perfect 5G, but I don't want the antenna anywhere near my house. And, more and more people are hearing about data centers, and, there's a lot of advocacy, pro and con, some environmental, some, maybe a little more global, but data centers is definitely an asset that is here to stay. And as we rely more and more on these little devices, like show your cell phone for those of you listening. The more data we need, and the more data centers we need. Hopefully, some of the electric that's used can be optimized, and maybe not as much carbon being entered into the atmosphere. But at the end of the day, I gotta live for today, and I need my phone to work as fast as possible. Eric, tell everybody here how they could reach out to you. A website, newsletter, YouTube channel, whatever you got, social media, whatever you say, we'll put in the notes. And go ahead.
Yeah, sure. So, first of all, you can find us at our website, www.tradesk.co. And you can also find me personally on my LinkedIn or our company's LinkedIn, which is Eric.Chu. And social media, we are most active in LinkedIn for now. And so and then you can reach me on my work email, eric.chu@tradesk.co. We'll be happy to, do a follow-up conversation, as needed.
Eric, I think the major takeaway here is that successful investing isn't about outsmarting the market with a single lucky trade. It's about building a repeatable, unemotional system that allows you to out-discipline the chaos. Thank you for joining me, Eric. I appreciate it. Thank you to everybody for joining another episode of The Wealth Clock. Like us, share us, subscribe to us. Eric, thank you very much.
Thank you very much, Stephen.